Well, we'll talk about how global indices are doing now. Of course, US and Europe starting the week off yesterday. They've started the week largely lower. When we're looking at US indices, the Dow down around 0.5% or so, the S&P 500 down 1.2%, and the Nasdaq down 2.3%. Slightly elevated is where tech stocks are really leading the downward charge, at least at the start of this week. Couple of events, of course, which start this week off. One is the earnings season kickoff. Q1 FY23 or Q2 calendar year 22 is where the numbers will start coming in, and the fear currently, especially that investors have, is that there is going to be earnings downgrades, which is going to start a downgrade cycle, which is going to start, of course, recession fears as well as demand and inflation. These are the pressure points that are currently what is driving the earnings season, and the expectation is that earnings are going to be set for a decline, or this is going to be the start of a decline. So investors have their eyes out on that particular count. Now when we're looking at the other side, Wednesday is going to see US release its June inflation data, and CPI inflation is going to is expected to continue to remain elevated. 8.8% is where that number is estimated to come in at. Of course, the lower base not helping, but inflation is expected to come in quite elevated. 8.8% is a high number, which will and of course the jobs report that came last week will also reconfirm or reaffirm the fact that the Fed needs to continue to hike rates and front load those rate hikes, and that will actually drive markets this week. So that higher inflation print will definitely put pressure on the markets if it's high, of course. So look out for that one as well, and that's what investors are looking out for. One is earnings, second is inflation. Moving quickly on to Europe. Well, European stocks were lower as well. In fact, the DAX fell 1.4% yesterday. The Stock 600 also down around 0.5% or so. And when we're looking at the FTSE, which is the UK index, largely flat is where it was. In fact, when I'm looking at how the futures have opened in early trade today, those negative cues have in fact poured onto US futures, and the US futures are also looking lower. In fact, the S&P 500 futures are currently staring at 0.5% of a cut over and above what we saw yesterday. So clearly it's poorer cues which are coming through. When I'm looking at Asia, also largely negative across the board outside of Korea. So Kospi is really what's hanging on to 0.5% of gains, but other than that, we're looking at losses all across the board. In fact, the Nikkei is down over 1.5%. The Hang Seng is down 0.6%, and the Kospi is also down over 1%. My apologies. The ASX 200 is what is leading on the gains. In fact, the ASX 200 is up around 0.5%. So all indices outside of Australia currently in the red. That's where Asia currently stands. The SGX Nifty 2 is down around 0.7%. So the poor handover is being poured on to the SGX Nifty as well. When we're looking at how oil though is looking, oil continues to be above the $103 a barrel mark. It's come off those $105, so it's a little bit lower, but nonetheless holding on to that $103 a barrel. In fact, Brent is just above the $106 as we speak. So clearly that's where oil is. Oil continues to be under a lot of fluctuation, if I may call it. So there's a whipsaw happening, and moving quickly on to gold actually. So gold continues to remain under lots of pressure. Gold was well below, in fact even $1,730 an ounce. It's crept up above that, but it was well below that as pressure continues on gold. Of course, the dollar index continuing to gain. Dollar index went above the 108 mark, still above the 108 mark, and that's not helping gold at all. So the risk of trade at play, dollar index gaining, and we're looking at the 10-year US bond yield. On the bond side, we're looking at the 10-year US bond yield at 2.97 to 2.98%. So that's come off that 3.1% or thereabouts. It's come off that high, and that will also continue to remain under pressure as the risk of trade plays out and as people buy in to bonds. Bond yields come under pressure. When people buy into bonds, bond prices go up. They're inversely proportionate to bond yields. That's how it works, and that's what's really putting the pressure on bond yields. Where crypto is concerned, well, crypto is this week at least, it started off quite weak, 5% down yesterday, roughly 5% down today as well. So Bitcoin is below that $20,000 mark, and across alternate coins as well, we are seeing losses of around 3.5 to around 6.5%. Currently, we're looking at a negative start for at least Indian indices. The SGX Nifty, as I did mention, down around 0.7%. All Asian indices lower, Dow futures lower. That's where it stands at the moment.